And we are pleased to have with us Nadine Leblanc, Chief Risk Officer at CMHC. Nadine, thank you for being with us. And just in terms of the scenarios we're talking through, we have to, we talked about the fact that there are the more plausible scenarios, which I think we would agree would be a U or some form of W. And then there's this very implausible. Somewhere in the middle is a housing market correction that we haven't seen in this country for a long time. We've seen kind of mini ones, but we haven't seen the classic peak to trough drop of more than 20%. Does CMHC have a view of the likelihood of that at some point?
It's a great question, Amanda, and thank you for having us. It's hard to answer this question right now with great certainty. I think it's fair that some of those scenarios were developed back in the spring where this pandemic was bringing great uncertainty, and there was no yet certainty around the direction of government income support. That said, I think our chief economist would be best placed to answer this question. But some of the risks that we're definitely monitoring right now as chief risk officer of CMHC is this definitely price correction. We're seeing people moving from, urban more to rural. We're seeing definitely some impact because of immigration pauses. And definitely this price correction is a risk that we're monitoring. And we will continue to build on this risk for our 2021 stress scenario to better understand how we can support and tailor our action, especially when we hear, certainly you've heard about this case scenario, and the widening of income inequality. And this is something that we are particularly concerned about given our mandate on affordability. And certainly this case scenario is on our plan for 2021 and trying to better understand that.
I want to dig in a little bit to the people that may be on the edge. When we talk about that 1% of your loan portfolio that's underwater, of course, is, as it implies, it means people are drowning. That's a bad place to be. I'm more curious to know about the people who are just above the water, because we just talked to the CEO of the Canadian Federation of Independent Business. 1 in 6, right? 25% or something of small businesses think that they may be close to hanging it up. That is massive job loss potential. Jobs are the most important correlation, as we know, in solvency. So what's your thought about how we tie those two things together? If big job losses come from the small business world, what does the solvency rate look like for your portfolio?
So I think if you would have asked me back in September upon the deferral program coming to an end, the risk would have been quite higher in our minds. Right now, our trends in arrear rate is around 0.33%. Deferrals are around 1.9% in our homeowner business. Safe to say that risks are well mitigating with this government income support programs. But again, there's a great uncertainty. And you've heard me say probably this morning in the press release, we are seeing greater loss from our stress testing in the farming, construction, servicing industry. And I think those are definitely borrowers that concerns us the most, and not necessarily them being underwater. But certainly our stress testing are showing greater loss from these borrowers in those industry. And so to your point on small businesses, we certainly are monitoring, the speed in which we're deploying those vaccines and making sure that we're monitoring the recovery shape of this pandemic.
One of the things I know CMHC has preoccupied itself with is the role you play in the market. In other words, your market share, because it has such a stabilizing effect. You have other insurers out there. Your market share has fallen. Has it fallen to a point that you worry about in terms of the overall stability, or are you still comfortable with it?
Absolutely comfortable. I think our July 1st changes were quite in line with our affordability mandate in protecting Canadian with level of indebtedness. We continue to serve all Canadians in the market. That's our role. We're not focusing on profitability, as you know, but making sure that Canadians can afford homes and having access to that form of credit, obviously, if they have the right credit background. And so for us, market share is, we monitor, but certainly not a concern right now. We are there to provide access to Canadians, and to your point, financial stability. And some of the July changes were tied to long-term indebtedness and long-term affordability.
All right, and not a lot of time here, but we have been watching those vacancy rates in the rental market, and we assume that means affordability will improve, Nadine. Is that a safe assumption? Are you happy to see that, I guess? Because that's been one area where it's been very difficult for many.
I will certainly not forecast at this point, Amanda, but I will say that certainly it is favorable for CMHC to hear those things. Of course, to your point, we're in the affordability space. We know that with this pandemic, the most vulnerable population have been impacted. And so this is accelerating actually the point of our mandate and making sure we're out there helping those most vulnerable populations. So music to our ears, of course, but we're not going to be forecasting, just waiting to see what's going to be the trend.
All right, Nadine, great to have you with us. Really important. Appreciate your time. Nadine Leblanc, Chief Risk Officer from CMHC.